This clip has been taken from the PPC Podcast Ep.2. Subscribe now.
The bank rate has been maintained at 5% following an 8-1 vote in favour to maintain.
Yeah.
So one person wanted the bank rate to drop to 4.75%. The other 8 all voted to maintain it where it is.
Yeah.
So the most significant statement from the MPC report, which I read every month, is that UK bank rate expectations implied by market pricing suggested that the next 0.25% cut would occur in November.
Yep.
Now, from my understanding, I believe the next bank rate decision is on November 9th. So this is the November that they're talking about. From a mortgage broker standpoint, what are your thoughts on this?
I'm seeing a lot of lenders at the moment reduce their rates and almost getting into not a rate war as such, but now that we've seen a fair few mortgages drop below 4%, on that, it's easy to get hooked by my friend got this rate, why aren't I getting it? It does depend on the size of your deposit. The bigger the deposit, the better the rates and terms you're going to get, etc. I think that the lenders have gone, well, this seems to be good news. Let's ride the wave of the good news and let's price competitively so we can start lending more money. So I think they're kind of setting their stall up. This happened in reverse. When the rates went up, when the Bank of England base rate announced that the rate went from, say, 1.25 to 1.75 and then went up from there and there, the lenders went, our rates are now 3.5%, 4% straight off the bat.
Wow.
And there was a big increase, and they were like, but the base rate hasn't increased because they forecast that that's where it was headed. Actually went beyond that. But that's where they initially went. So what the lenders are doing is this in reverse. So they're going, well, we think it's going to fall around here. So it's going to get ahead of it because it's good for business because people will then start borrowing. Of course. And that's what they want to try and encourage. So I think that the pricing that we're seeing at the moment is probably the goods for the long term, and it's not so much 5-year fixed deals that I'm worried about because I think they're generally priced quite well at the moment. They're high threes, about 3.8, some of them, and I think it's more so the 2-year deals I want to see come down into the fold, just purely because it adds a bit more parity at the moment, because there is that bit more of uncertainty over the next couple of years. The lenders still are pricing their 2-year deals higher than their 5-year deals, just because they don't really know. We haven't quite settled into it yet. If we think about it from if you took it over time, I think the rates went up and they've only just steadied, and it's only just dropped. So there's a bit of a way to go yet. So they're going, well, this is still early in the is this good phase. So they want that to be steady and maintained. I generally think that the mortgage rate drop is encouraging. I think if everything is even and there's no more pandemics, there's no more warfare, there's no more meltdowns and things like that, there's lots and lots of things that this needs to be variable. But as long as that stays steady, then the base rate will hopefully climb down to around 3.5%, I would like to think, but that's going to take about 18 months. It has to be slow and steady. So but I think that the rates will be offered from the banks are probably not going to change massively once the second base rate drop's been announced, and then they just feel that level of certainty. I don't think it's going to go much below, if anything, below 3.5%, because what you don't want to do is create another problem by going with the rates too low again. That's where I feel that we are. I think it's sensible now.
So have you noticed since the last bank rate cut, have you noticed any significant offers within the mortgage market?
I do think something that's really encouraging, well, as long as it's being sensible, is I've noticed a lot of lenders actually beginning to increase the affordability margins. So whereas where they would normally lend, say, 4.5 times joint income, backed by an affordability model in the background, it can't just be 4.5 times income. So for instance, if I earn 50 grand a year, and I did 4.5 times income, but I've got a bank loan, a credit card, and this, that, and the other all going out, but I'm earning 40,000, I've got none of that, I could actually be better off on the 40 grand. So the affordability model still needs to work with income multiples. So it's easy just to get sucked in by, they said that they would do this, or some of the lenders now saying they'll lend 5.5 or even 6 on one or two of the lenders now offering, which now really helps open that out to new lenders, combined with the lower rates that are now being offered too. So that's encouraging. The news and the criteria is encouraging, but it just means that lenders are still going to be relatively careful on what they're lending. What they don't want to do is go back pre-2008 and lend money that is risky. They don't want to have a risky book. They want to be safe. They've had a lot of uncertainty. As long as the money looks good, then we're okay. But I think that the other thing that's really come out of the woodwork more so, and we're finding a lot more inquiries about now, is more specialist finance. So that's some secured loans, that's some bridging finance, that's some development finance, this kind of thing, because we're beginning to also see buy-to-let come back a little bit. Not a lot, but it's coming back a bit, because the criteria around it is getting easier. The stress rates are getting easier that the lenders are now working on, so it becomes easier to get those deals. It's just now whether or not it's making money for people.
Okay. I've just got my head spun around 2 or 3 questions. So let me start off with this. So if they were to cut the rate in November, I know you've just said it's probably going to take a good 18 months for things to really settle down to where they need to be. However, if they did decide to drop the bank rate, could you make any predictions on what might happen within the mortgage market?
In my general thought is just good feeling. It'll be a case of people would then be wondering whether or not that would be passed on. I think the honest answer to that is it already has. The forecast is that they're expecting it, so they've already priced accordingly. So I don't think, in real terms, I don't think there'll be much change. I think that the rates will be about the same as what we're seeing now. It's just more encouraging to the market, and it will encourage more people to be thinking this feels like a safer time to get on board.
All right. So from that, let's speak about inflation.